Hi, I'm Dr. Rollan Roberts, and welcome to this week's Google Hangout on where to invest $10,000. Now, why $10,000? Well, I've been asked several times over, it seems like the last month, where should I invest? And I'll say, well, how much do you have to invest? And they'll say $10,000. And that's just been a number that has resonated with me from people that I've talked to or that have reached out over the past month or so. And I think there's a few reasons for that. I think that people assume that it takes money to make money, and in many regards it does, and so they think that 10,000 is enough to start really making a difference in their investing. They feel like 1,000 is too low, and 100,000 might be out of their reach. So 10,000 seems to be something that a fair number of people that have been working for any length of time, it is attainable, it is achievable. That's a likely amount that people can kind of stumble upon through a variety of different things. And so that's why I want to answer the question, where to invest $10,000. And, there's several different questions that I want you to ask yourself before we give you that answer, okay? Because your answers to these questions really determine what the right investment is for you. I had one email that asked me where they should invest the $10,000, and the questions that I asked back were very simple, and literally they said, I don't know about any of that. I just want to invest it and get money back. I just want to put my money somewhere and get money back. And it helped me understand how little people know about investing, like practical investing, not let me go find the nearest financial advisor and then whatever product and service they're getting paid to promote to me or stock, that I just give them my money. I remember the first time I invested $1,000, I saved and saved and saved and saved and saved to get that $1,000 that I proudly sent into a mutual fund that was recommended to me. It was really weird to me whenever they end up taking a few $100s out of it immediately. So I give you $1,000 to invest, and next thing you know, I'm at 900 or 870 or something, and I'm like, we haven't even started, and I've lost money. How does this work? And that is where a lot of people are today. They just don't understand, especially that have $10,000 to invest. They don't understand how it's actually going to go down, and then they can't prepare themselves psychologically, and so then they get frustrated and they hate investing, and they actually end up making rash decisions and lose their money. But I've done that. I've been there, and I've done that, and I've lost money on every category of investments there are, and I've made money on every category of investments there are. And so I think that today will be a real big help to you. But if you're looking to invest, here are some things that I want you to ask yourself. Number one, are you looking for an active or a passive investment? So do you want to invest in something where you can contribute to it? Or it requires your skill, it requires something that you know, it requires something that you're good at, something you can contribute to, or it requires you to stay involved in that investment. It is an active investment. That may be like real estate. If you invest in a fixer-upper and you can do the work yourself, or you're going to oversee a team, or you're going to do property management, or you're going to start a business, a cleaning company, and you're going to do the cleaning, or you're going to start this kind of a business and you're going to do the work? Or are you looking more for passive investments, where, as that one email that I received requested, I just want a place to put my money in and I'll make more money back. And so passive, in their minds, it's like, I'm going to give this institution that I've never seen their building, I've never seen the people, I don't even know if it's real or not, but I'm going to send my money in there, and then I'd like to magically get money back every quarter. And really, 10% is kind of sad, because on the course of a year, if I take your $10,000, your precious little savings, and then this time next year I give you back $11,000, you might be like, man, I tied up a lot of capital for a long time for not a lot of money back. And they're like, really? Is this how investing goes? No, it's actually not, because you got it a lot better than many times investing can go, because you got a 10% return in this economy. See, so the expectations of what people think are normal, or would be normal, for a $10,000 investment, 10%, even over the course of a year, doesn't seem like that great. Or what if we give them 5% and said, okay, over the course of the year, you'll get $500, I'll pay you $500 for me to use your $10,000 this year. I mean, that's a long, slow growth process, and that's fine if you're going to live another 100 years. But the people who are asking me, and I'm not railing on passive investing at all. I certainly think that it has a place. I mean, there are stocks and bonds and mutual funds and all kinds of financial assets and financial tools, tax liens. There are some good things that can give you great or at least consistent returns, as consistent as it could be. But I can just tell you that I and many other people have lost a whole lot of money in that, and you have zero control. What we're learning about investing in the 21st century is that the more control you have over that investment, the more likely it is to succeed. And it's because nobody cares about your money more than you do. You worked hard for your money. You're going to take better care of it than someone who's getting a commission off of it would. And you can put a face, and you can put hard work, and you can put sweat, and you can put tears, and you can put family, and you can put everything else into that money and into that investment. Whereas a third party just sees it as dollars and sees it as something that can be lost and something that can be regained. So that's one of the things that you need to understand about yourself before I can just tell you, here's where you should invest your $10,000. So understand, and I need to know, you need to answer for me, are you looking for an active investment or passive investment? Do you want to be actively involved, or do you just want to give your money somewhere and hands off? Second thing, second question of the three that you need to ask yourself is, how much are you expecting to make off of your $10,000 investment? Now this is very important, because however much you tell me you expect to earn off of that $10,000 will help let me know where we need to go to invest it. Okay, so if you need to double your money, if you this time next year you want to have $20,000 instead of $10,000 to play with, that's a very different investment than the person who wants to try to make a safe return over many, many years of $300 to $500. And so it's a very different approach. So how much are you expecting to earn? Because someone would think that you're a horrible investor if you only got $300 back this year out of your $10,000. But if that's the only thing you were willing to do, or the only type of investment you were willing to make, then your expectation has to be in line with what you're willing to do, with the risk, if you will, you're willing to take on. So, because some people would say, okay, Rollan, I can take the very first investment you made for $1,000. I could take that and turn it into $10,000. But you could also lose all $1,000. Or they could have done what I did, and I didn't have that option, by the way. I'm just saying, what I did was I took the $1,000 and I immediately lost 14% of it, or 15%, or whatever it was. More than it would take a couple years to make back, at that time. So if you are looking to make a little bit versus a lot, the instrument, the method of investing changes based on what you're trying to accomplish. See, that's why you can't just respond to an email and say, oh, where to invest? Here, go here and invest there, or send your money to this P.O. box, and then you'll get a check back in 6 months. It's just not how it works. So the third question I need you to answer for me, so that we can properly answer the question for you, where you should invest $10,000, is when do you expect to make that return? So you just told me how much you expect a $10,000 investment should yield you. So the next question to that is, in what time frame do you think and expect that return? So if your return is for, you expect a $1,000 return on your $10,000, okay, do you expect that next month? Do you expect that in 6 months? Do you expect that in 6 years? What is your expectation? How long do you think it should take to make $1,000 off of your $10,000 investment? And I love thinking about those kind of things, and everyone's answer is different, and no one answer is wrong. It's just what is going to work for you, what's going to be the best investment for you. That's why there's so many different ways to make money. That's almost why there's no excuse not to, unless your head is just in the sand and people aren't doing what you're doing, watching a video and hang out and getting educated on how to invest and the best way to invest so you don't lose it. And so when I say don't lose it, I mean like mentally as well as physically, emotionally. Investing is an emotional game. It's an emotional issue. And so you have to really learn to harness that. And the other interesting fact that I'll share with you is some of the people that I've worked with, and I mean both me as the investor, and then other times when people are investing in me or my business or companies. And so I've seen this on both sides. The people who invest the least are the worst investors because they call you constantly, they nag you constantly, they take up all your time, and they didn't give you any money. And then you got the guy who writes you $1,000 check and thinks he just wrote you the world, and then you got someone else who puts in $100,000 or $200,000, and they like send you a one-sentence email every 3 to 6 months. Hey, how's things going? Are we still on the right track? Yes, fantastic. Here's the update. But the people who invest 1,000 be calling every other day. How's it going? What happened today? Did we make any sales today? Excuse me, things like that. So you need to know how much you expect to earn off of the $10,000 investment, and you need to know what time frame you expect to earn it in. All right? So those answers are going to help us in just a moment. But before I get to the specific answer for you, I want you to understand there are 3 investment vehicles that you have to choose from. You have to choose from. Now, there's thousands of ways to make money inside of these, but there's only 3 options. There's only 3 places ultimately to invest. The first would be real estate, and this may be flippers, where you buy a house for $30,000, you put in $20,000, and you sell it for $80,000. It could be where you buy a duplex or a fourplex, and you do rentals, or maybe you do commercial rentals, and so, or it could be single-family residences. It could be you can focus on residential, you can focus on commercial, you can focus on the low end of the market, the under $75,000, under $100,000 homes. You can focus on the high end of the market. You could focus on different types of rentals, high-end rentals, HUD rentals. There's a lot of different strategies within each one of these 3 fields of investing. But here's what real estate, for you to be successful, it helps if you have some skills. And depending on the type of investment, depends on the type of skill. So, for example, if you are really handy and you're very skillful with your hands, maybe you're a construction worker, then maybe doing a flipper is the safest investment you could possibly do, because you're going to know what the costs are. You're going to be able to evaluate a property and say, this house is going to take $50,000 worth of repair, not the $20,000 that they told me it would take. Therefore, I would lose money because the most I could sell this house fully renovated for is $70,000, and I bought it for $30,000. So I'm now upside down in an investment, and I'm going to lose $10,000. I'm going to lose more than what I even put in. So that's the kind of thinking that you, and because you have that skill, that would make that one of the safer investments for you. Let's say you are not good at using your hands, or at managing people and leading people, or you don't know, or your dad isn't a general contractor who could do this, or someone that you trust immensely to be able to help you, guide you through that process and know exactly what the math is before you get in. Then let's say instead you're a marketing director. You market for a living. Maybe you do social media for your company, and so you're very handy online. Well, how do you invest in real estate? Well, another one of the ideas would be if you did renovate something, or if you had somebody who just renovated something, and you said, hey, let's say I knew a contractor, a handyman who was going to renovate some property. I could say, hey, why don't we do this? You need the cash because you don't have $10,000, but you have the skill. I know how to market. If I put up a website, Rollan's Property Rentals or Rollan's Cheap Vacation Rentals or whatever, then I will put up the website and I'll manage it as a business. We'll split those proceeds, but you can't buy that house unless I invest the money. So there may be a way for you all to work out a deal, even where they get paid from future revenues to some degree. So there's all kinds of creative things that you can do inside of this umbrella of real estate. It's so funny. When I've told people that I invested in real estate, that was the first way that I invested. They keep thinking I was a realtor, and realtors can invest in real estate and have done good, but that's a job. That's working. That's not investing to me. That's the same as someone going and working at their a 9-to-5 job. That's not investing. They may have also been a real estate investor, so don't confuse. What I'm not saying is go out and become a realtor and get your license and all these kind of things. You don't need that. There's all kinds of other things with real estate I haven't gotten into, but it depends on your ability to make money. Real quick story. So one of the ladies that I was working with on where to invest $10,000, her family has acreage and was going to build multiple cabins, vacation rental type cabins, to be able to rent out. And in that situation, based on what the construction family member was able to cost out, they were going to be looking at, let's call it $5,000 a cabin, so they could come up with 2 cabins. Well, there was another thing on their property that they were able to renovate, like a tower, that they were able to renovate into a unique vacation home rental that also would work not just for peak seasons in that part of the country, but it would also work year round, and they would, because of the uniqueness of that property. But what they did was this lady invested the money, or could have invested the money into the renovations for the family member that's in construction to be able to do the renovations. They're going to do the property management of that unit, and literally, just to give you some rough numbers, if that was a $10,000 investment, literally they would have been able to make about $15,000 the first 12 months from renting that out, and so they would have gotten their initial investment back with a 50% return. So now, 12 months later, you're working with $15,000 instead of $10,000, and from there on, you're still managing that property because you're good at social media, or you're good at online advertising, SEO, marketing, and so now you're splitting that between the landowners and the homeowners and the construction worker, a family member, and yourself. In which case, once again, based on $15,000 a year, that's an extra $7,500 a year per investor. And what's unique about that is, yes, they could end up building more and doing more if they wanted to reinvest that. Or how nice is it to have $7,500 a year extra just from a passive investment that you did of $10,000 however long ago. So, but you have to understand how much you're expecting to make off the $10,000 investment, and when do you expect to make that, and you have to take into account skill. So we only came to that conclusion that would probably be the best avenue for them after eliminating some of these others. Number 2, the second way to make money is with paper assets. These would be stocks, bonds, mutual funds, tax liens, and once again, it's about control. So it's if I was going to invest in paper assets, I would like to know the management. Now, some could say, obviously, Berkshire Hathaway or Apple, or some of these whose stocks are $600 a share, and Warren Buffett. These are safe investments, and so you can put your money in there, and you own fractional shares even, and through mutual funds, or they diversify the portfolio. That is the fastest way to lose money if you know what you're doing. And that's really what I would say. If you don't have a clue what you're doing in any of these areas, and anything I'm saying is not resonating with you, you need to not invest your $10,000. In fact, before I even talk about where to invest $10,000, if you have $10,000 in debt, you need to pay that off before you're trying to. If you're paying 6% interest on on something, let's not try to. I did this. I operated this way where I would then try to say, okay, well, if I can take that same money and make 10%, then I'm actually netting 4%. It's not worth the risk. It's not, especially if you don't know what you're doing. It absolutely, assets should pay off liabilities, but you're supposed to get the asset first. But most people aren't starting from that perspective. They're starting with liabilities and trying to acquire assets. So, but paper assets. My issue with paper assets, mutual funds, absolutely, even if they can have the 10-year perspectives, 20-year perspectives, whatever, the rules are just changing so fast in today's economy that what used to be just is. It's not anymore. And I see a lot of people make mistakes with the market. I see smart people, brilliant people, and the game has just fundamentally changed from a stock market. Now, on a stock market, if there's a company that I know about, a company that maybe I have been one of their most passionate, loyal customers, and there are a few companies that if they went public, because I have such a long history with them, I would invest in those. But that's because I feel like I know them. I've had a relationship with those companies for years, and so that would be a possibility. The other possibility is if my friend had a company that's very successful that I've, once again, probably been a passionate follower of for years, and he decided to take that public, then I would invest in that company. But it's because I know the management, I can talk to the management, I know what their strategy is, I know what their future is. I'm not getting this from a 1-hour phone call every 3 months on a quarterly call. I'm not understanding what their investment strategy is from a blip on a website. It's people that I'm sitting in the little league chairs and in the bleachers with on the weekends, at the soccer tournaments. It's people that you see in the coffee shops. It's hands-on, which actually is local. Local investing is just growing by leaps and bounds, and not just local investing, but crowdfunding. The one great thing about crowd funds is that the founders and the startup executive team is immensely more accessible. They're available. You can talk to them. You can reach out to them. You can call the number on their website. They may be the ones that answer the phone. They're that accessible because they have a passion, a dream that they are trying to get to market, and they are accessible. And you can call them all the time. You can stay in touch with them all the time. Now, a smart investor wouldn't do that because if they've made the right investment, they need to let those people do their job and get it out. I don't want to make mistakes because I'm on the phone all day. I need to work in order to make your investment come true. See, so that's what I would caution you on if you did that. But paper assets, and I kind of got ahead of myself because the third direction, the third avenue that you can invest in is business. And there are multiple ways to invest in business. You can invest in business. By the way, if you are an employee, you are investing in a business right now just with a really bad return, and that's your paycheck. So understand that these are the only ways to make money, period, and everything people do is inside of one of these three areas. Once again, there's 1,000 different ways to make money inside of each one of these three categories, but if you are in business, you can invest in a business. Even if I have a job, I've got $10,000, I don't want to own a business, but I want to invest my $10,000, you could invest it in a business. So now we need to go back to the initial questions that I asked. Well, how much do you expect to make, and when do you expect to get that return? And then we can look at, okay, well, what type of business investing is right for you? And in that case, it may, and this depends on your involvement. It depends on if you want to be an active investor or a passive investor. That was the very first question. It depends on what your skill set is. Maybe you have a skill to be able to offer that company, and there's a way that you can invest and contribute. Because what better way to maintain control over your investment and have be able to steer that and make sure that it's safe than actually being a part of it. So if it's even better if it's something that you're skilled in. But ultimately, what it comes down to is, are you interested in it? If I only had $10,000 and I had to invest it, I would absolutely make sure that I'm investing it in something that interests me. Now you say, I'm busy, I'm working, I don't care if it interests me or not. I just want to get my money back. Then you will lose it. You are the gullible investor that every shark loves. And I'm trying to keep that from happening. So in business, understand that no matter what or how you invest, which category you invest in, doesn't matter. If you are interested in that, if you have any type of skill or strength or connection or someone who has a strength or a skill in any of these areas, that there may be no better investment you could make than doing that. Nothing safer, nothing with a bigger return than doing that. And so, and once again, you can lose your money in all of these, but that's why it's an investment. You know, I think that as I went through each one of those categories, one of them or some dynamic or aspect probably felt better to you. You probably felt more comfortable with one of those than you did with another one. That's where you should look at. You need to know that field. Think about who you know in that field. Think about what the opportunities exist. Maybe you're so well connected in your town. You know this one corner lot, and Exxon has been wanting to go in there for years, or Subway's been wanting that lot, or whatever. And it's dirt cheap. It's $8,000 for this corner lot, or it's where the city's going to develop, and you happen to know some of those things. You're not gonna. It's based on how you answer questions 2 and 3. How much do you expect to earn, and how long, what time frame do you expect to earn that in? That might be a great investment. So, and also some people are very comfortable investing in things that they can't see or touch, ideas, patents. Then there are other people who only invest in things that they can physically see. Like if you don't have a storefront, they don't think it's a real business, which is really funny considering all the millions of dollars people make online, but and in different capacities. It just boggles their mind, but that's okay. It leaves more for everybody else. And here's the thing. I can always, for a $195 visual coaching call, we can actually go through your specific situation, your skills, your strengths. I'll ask a lot more questions, but that will help give you the framework and parameters of exactly where to invest in. And my coaching calls, visual coaching calls like this, are $195 an hour. So that's not a bad investment if you have $10,000 to invest to make sure that you're headed the right direction. And then, of course, I can help you with our all-in program. It happens to be $10,000 for me to work with you for 3 months, all day, every day, as much as you need, running your 90-day race. Maybe it's starting a business, growing a business, achieving a monumental, seemingly impossible goal. Then the all-in program would be for you. That's a great program for business owners, entrepreneurs, celebrities, professional athletes, people trying to get to the next level in their career. That's a really great option, and that's who really benefits the most from that particular program. So join me next week. I have an amazing topic I'm really excited to talk about: observations versus conclusions, where businesses go wrong. And it's going to be fascinating. I love talking about things that I never see or hear. And so observations versus conclusions, where businesses go wrong. I'm Dr. Rollan Roberts, and remember, success likes speed. Have a great week.